Most successful investing can be summed up as go short abundant things and go long scarce things. For example, you borrow fiat currency, which is abundant to buy properties and businesses, which are scarcer and more energy and labor intensive. Scarcity is not the only factor to consider. That is, for an investment to be successful, you generally also need the scarce thing to be desirable and growing or maintaining market share versus similar scarce things that fulfill a similar niche. But analyzing investments through the lens of abundance versus scarcity is a good first step. In an era of fiscal dominance, bonds are among the most abundant things around. The US government will be running $1.5 to $2.5 trillion annual deficits for the foreseeable future and going structurally upward from there. The Congressional Budget Office estimates that there will be $20 trillion worth of cumulative fiscal deficits over the next decade, and their assumptions are that interest rates will be lower than they are currently, and also that no recessions will occur. If interest rates are higher than their expectations or some recessions occur within the next decade, then that $20 trillion estimate is likely to be exceeded. This represents at least $20 trillion supply in new federal bonds for sale this decade, and even more the next decade, and even more the decade after that. That's not an asset class that I want to be structurally overweight, even as it will likely have good years here and there. In comparison, at current production rates and prices, somewhere in the ballpark of $2.5 trillion worth of refined gold will likely be mined and minted over the next decade. Changes in prices or production rates could change that, but gold's production rate only changes slowly, which leaves price as the primary absorption mechanism if more or less capital wants to flow in. Similarly, at current prices, about $70 billion worth of Bitcoin will be produced over the next decade. Its supply growth rate is fixed regardless of its price action, but changes in price can act as an absorption mechanism depending on how much capital wants to move into or out of the asset. Stocks also represent a scarcer alternative to currencies and bonds, but only if purchased at the right price. For example, I'm not exactly rushing to buy stocks like Costco at 46 times earnings here. It's a great company, but everyone knows it's a great company, and so it's already heavily owned by investors. Comment below which of these assets you're looking to hold long term. Thank you, and if you enjoyed the content, please leave a like and tap the subscribe button.